Thanks for coming in. We've seen the Ben Bernanke testimony already this morning. A few comments, in fact, from that, namely the fact that he wants the firewall expansion required in Europe. The calming of Europe's crisis has led to an improved tone of financial markets around the world, but it's still difficult. Do you agree? Has it been an improved tone? And if so, how have you reallocated your assets, if at all?
Yeah, there has been a definite improvement. You look at some high-frequency indicators, both in the US and Europe, mainly relating to financial conditions. And that has improved quite significantly in the last 3 months. And if the financial conditions remain buoyant, as they have been, it is going to have a positive feedback loop into the economy. But risks definitely remain, especially in the euro area, where we believe that banks have to raise a fair bit of capital going into the second quarter of this year. Let's not forget that the
European banks or US banks or every bank?
We basically feel European banks need to raise capital. US banks are on a different platter. They've been increasing their dividend payouts, buybacks. So they have gone through the restructuring process a lot earlier as compared to the European banks. European banks need to raise capital in the second quarter, maybe a $200 billion amount, and that's going to be a critical thing. If they can get the capital, I think we should have a fairly decent year.
How big is that if, Binay?
If you look at the current conditions, we are hopeful that they will be able to raise capital.
If, not good.
Well, I think they will be able to raise capital, yes. At this point in time, the way conditions are, the stress levels have gone down. Their need to raise capital has also partly been buffeted by the fact that the asset book is not deteriorating anymore, you know. So the slippage there is better, which means that maybe they can do with some more internal accruals to add to capital and raise some extra capital from the markets.
Until overnight, we saw bonds falling for 9 days in a row. Clearly a shift to equities. Even Barton Big is always regarded as bearish back in the 90s, increasing his exposure to 90%.
Yeah.
How have you allocated your assets? Are you still holding on to some cash, or are you applying that now into?
We have been like slightly overweight risk assets as compared to bonds, because we've always felt in the last 6 months that bonds are deeply overvalued. There was a big technical bid on bonds because of the risk-off syndrome. And as some of that risk-off syndrome wears off, clearly bonds are going to be sold off. So we've been like allocating on opportunities to risk assets over the last 6 months.
Are you surprised that there has been more of an interest in risk, considering that the market, rather the climate economically, is still pretty fragile?
It is fragile, but we have to, at the margin, look at the improvement in the accommodation provided to the markets, and that's helps sentiments. The second thing which is helping markets, obviously, is that ownership of risk was at very low levels going into last year. So, you know, as you saw the economic environment improve a bit, induced by positive policy moves, you know, risk had to come back in, and so we've seen a bit of a rally over the last 3 months.
Which asset class that offers risk do you favor the most right now?
I think equities are better as compared to bonds.
Asian equities compared to the US or Europe?
We like US and we like Asia. We don't like Europe as much, and that's partly because of our assessment that European banks need to raise more capital before they can go out and lend meaningfully to the European industrial sector.
I'm going to drill down even deeper. Of the equities, therefore, in Asia, which industry?
Well, we're positive on energy, partly because you're seeing energy revision momentum being strong, partly because it's also kind of a hedge against what happens to the oil prices should there be a geopolitical problem in Iran. We like select financials, we like consumer stocks. We don't like materials as much, we don't like telcos as much.
Binay, many thanks for joining us. Binay Chandgothia.